Hey everyone, welcome back to the channel. Question for you. Do you know what your credit score is? It's an essential number when applying for mortgage loans, but a lot of people have no idea what their score is, or they think they know what their score is based off of estimated models online like Credit Karma. Or maybe you do know your credit score, but you think it's too low for you to qualify for a home loan. I'm Joe Nelson of Nelson Home Group, Kansas City's highest rated real estate team on Google. I'm also a licensed loan originator with Nexa Mortgage. And today, I'm going to break down what your credit score needs to be for each of the most popular loan programs and talk about credit scores. Stick around until the end because I'm going to tell you how to find your credit score for free and give you some tips on how to bolster your score so that you can buy your next home. The first thing you should know is that when lenders talk about your credit score, we're typically talking about your FICO score. Now, FICO stands for Fair Isaac Corporation, and there are 3 credit bureaus under the umbrella that each score you: Equifax, Experian, and TransUnion. The higher your score by each of these 3 bureaus, the more likely you as the borrower are scored as repaying your loan. And the lender's usually going to use the mid-range score of the 3. The exact formula used in each of these is slightly different and all pretty under lock and key, but there are a combination of payment history, debts owed, length of credit history, new credit, available credit, and open credit not used, just to name a few. Your FICO score is a summary of all of these things, and it provides lenders a shorthand to gauge your credit worthiness. It's only a piece of the puzzle that puts together your approval terms and interest rates, but it is an important one. That said, what credit score do you need to qualify for a home loan? That depends on the loan type. You can qualify for a loan program with a lower credit score than you may realize. For a conventional mortgage, a credit score of around 620 is usually enough with as little as 3 to 5% down. This minimum score is set by Fannie Mae and Freddie Mac. The higher your credit score, the lower the down payment and interest rates available to you may be. FHA loans are backed by the Federal Housing Administration, who sets the minimum credit score as low as 500 if you can provide at least 10% down. It's a great option for people with lower credit but who have cash on hand. Typically, if you've got a credit score above 620, you're likely to be able to get that same FHA loan, but with only 3.5% down. VA loans, which are 0% down and are available to veterans, current military service people, and qualifying spouses, are slightly different. The U.S. Department of Veteran Affairs doesn't set a minimum credit score for its loans. Individual mortgage lenders, however, are free to set their own minimum score. Most require a minimum score of around 620, but you may find lenders willing to go as low as 500 depending on a lot of extenuating circumstances. Too many to cover in this short video. Again, the terms of your loan can often depend on how high your credit score is, so you may be approved for more or get a lower interest rate with a higher score. Like VA loans, the U.S. Department of Agriculture doesn't set a minimum credit score for USDA loans, but some mortgage lenders will set a minimum of as low as 580. In all of these cases, there is a minimum credit score, whether set by government organizations or the lenders themselves. So you can see why your credit score can be such an important piece of the mortgage puzzle. But if you have a credit score above 500, there are loan programs potentially available to you. Okay, so here's the really confusing part though. Ready? Just because you have these minimum scores does not mean you will automatically qualify. A lot of clients will ask me, hey, what's my score needed to be ready to go for a home loan? Well, that's not as easy as it sounds or as black and white as you might think. Most lenders use an automated underwriting program up front, which has an algorithm to evaluate the details of why your credit score is where it is, and it can give the lender an automated approval up front. It also evaluates things like debt to income, assets on hand for closing, or cash reserves in an emergency situation, and of course, down payment amount. If you have a credit score in what I would call the gray areas between the minimum score required and the more comfortable numbers most lenders like to see around 620 or higher, you will likely require either what's called a manual underwrite, or you'll have to really pick up the slack in one of those other areas like reserves on hand or debt to income. That's what makes it so complicated and not black and white. Now, it's possible to qualify for a loan with a score below 500. Remember, VA and USDA loans don't have a set minimum score by the government programs that back them, so you may find a lender who's willing to qualify you at a lower score. But the terms of your loan aren't going to be ideal. Interest rates will likely be higher and the available mortgage balance will be lower the lower your score is. So if you have a lower credit score and want to buy a house, your best move is to build your credit score to give you the best shot at favorable loan terms. Once a year, you can obtain a free credit report from annualcreditreport.com. The downside is it will not reflect your score number, but it will show you all of your information and where any pitfalls or red flags might be hiding. One resource is actually to get your Equifax credit score directly from FICO at myfico.com with updates available every month. You can get additional scores with their priced package, but this score will give you a very good idea of roughly where you would land with the other two. You may be surprised to find you already have a high enough score to qualify for any of the loans we talked about today. If your credit falls below that range, don't worry. I have some tips for you on how to build your credit score quickly. Please remember, these tips are based on getting scores up and may not be the best option for your specific situation or goals. Number one, make sure you're making your payments on time. This is huge. Payment history is a big part of scoring, and late or missed payments are a massive hit to your credit. A payment more than 30 days will stay on your report for up to 7 years. Auto pay is a huge help in making sure payments don't get missed in the billing shuffle. Second, make sure to put your revolving credit accounts like credit cards as a priority. Paying down high balances here should be the focus. With credit card companies typically reporting to the bureaus once a month, you could start to see an improvement in your credit within 90 days. That said, you don't need to pay them all the way off. You just don't want them maxed out, and you don't want late payments. So if you have multiple cards maxed out, work on getting them one at a time to about half of the available credit limit and then start on the next one. The third thing you need to do is make sure you leave your oldest account open. While paying off your outstanding balance is important, the length of your credit history makes up about 15% of your FICO score, and your oldest account has a huge impact on it. Additionally, opening multiple new accounts in a short amount of time could set you back pretty big as well, so limit the amount of new credit applications that you make. This tip is especially good for those who haven't been able to build a credit history yet. Become an authorized user on a loved one's card. This can have an immediate impact on your credit. If the account is managed well, this will reflect on your credit score and typically will be updated to credit bureaus within a couple of months. Next, check for inaccurate information on your credit report and dispute it. Credit reports can usually be settled within 30 days, and the bureau can correct or remove the discrepancy. Finally, make sure your credit is diversified. The mix of credit lines you have makes up 10% of your FICO score. Having both a car loan and a mortgage will give you a stronger credit mix than simply having a credit card. This tip is good for a slow and steady way to raise your credit score because, again, too many new accounts at once can hurt your score in the short term. The best advantage you can have when raising your credit score is to work with someone who knows the ins and outs of how that score will affect your available mortgage loan. Find a trusted lender as soon as you think you may want to make a move. They can find you the right loan program for your current financial needs. And if your credit needs some repair, they can advise you on the best steps to take to raise it quickly. Many lenders work alongside credit repair companies and can refer you to a trusted partner so that you have the time and knowledge to build your credit before you're ready to buy a home. If you're looking for a lender to help you lock in the right mortgage loan program for you, make sure to give me a call. My number and email are on the screen. You can also click the link in the description box below to apply and see what you might qualify for. I have also linked annualcreditreport.com as well as myfico.com. Leave a comment letting me know if you found any of the minimum credit score surprising or which tip you found most helpful in building your credit. As always, make sure to hit that like button and subscribe to the channel for a new Kansas City real estate or lifestyle video every Friday. If you're looking to buy or sell or refi a property in the Kansas City area, give me a call or text. My team and I look forward to being your Kansas City real estate experts. See you next time.